Thank you for reaching FTC4 production, my people. Today I wanted to share this important tool that a few people in the field have been asking me about, some other co-workers have been talking about, and this is especially for those who actually deal with the stock market that are actually always trying to average down and just wonder what if they could calculate this really quick way before putting the money on their current position to average down their position, how much it will be, so they know exactly how to go for or which one to go for. And I found this stock average calculator. Note, I gotta let you know this is not the only stock average calculator. This is the one I found that is for free for you, and I'm pretty sure there are others for free. But this one is available on a website. You don't have to download an app like many of those out there. This one just straightforward, which I'm gonna put the URL down below on my video description so you actually can come and check it out for yourself. But how can you use this? How the stock average calculator works? In the stock market, averaging the stock price is necessary to minimize the massive loss in trading or investing, which that's what I was trying to explain at first. Um, Using the average down calculator, the user can calculate the stock average price if the investor bought the stock differently and with other costs and shares amounts. This stock average calculator tool added all the shares bought differently, divided by the total amount used to buy those stocks. Finally, the user gets the average down the price of the stock. How, how to calculate the average price of the stock? Averaging down the stock is done by purchasing more shares at a lower price than the previous price that you bought it for, which provides lower cost per share if the process is repeated. A slight upward move on the share price can generate a better profit than just holding the stock for a price rise. In basic mathematics, the average price is a typical example of a range of prices. It is computed by taking the sum of the total cost spent and dividing it by the numbers of shares. The average price reduces the stocks into a single value, and the price is compared to previous prices to determine if the value is higher or lower than what would be expected. In cases where there is a series of prices, it is helpful to calculate the average cost using the average down calculator, which is the one that we have above here, which we're gonna go and make some example later on to reduce the range of prices to a single price. Well, let me click on it because um, yeah, it's the same one. Just wanted to make sure, you know. Maybe something else that is a link directing me over there is kind of silly. When investors or traders buy shares at different prices, they want to know the average price, and then investors decide that the stock is a profitable purchase. For example, I actually have this TD Ameritrade online, I mean on a website on my computer, and they don't tell me the average price of the stock that I bought it for. I mean, at least I had tried to check it out on my computer and I don't see it. So for me to get to see it, I gotta go to my cell phone app or open it into my cell phone in order to check it out on a web page on my cell phone. Somehow I see it like that, but in the web page I don't get to see none of that stuff. And I try to set it up in different ways, but they don't put them in there. So it's kind of annoying. But I don't know if you're the only one going through this, but in TD Ameritrade I actually happen to go there. I had to go to my app to do that, and I don't like to use my cell phone all the time if I'm actually in front of a computer. Um, So, for example, if you buy shares for $10 the first time, and let's say that, and more shares of the same stake for $6 next time, let's say, like if you buy shares at $10, and then you leave it in there for a few days, and then later on the price drops to $6, and then you actually add more shares at $6 at the same time. That's what it's trying to say. The average price of the shares equal the total buying price divided by the total numbers of shares bought. The higher the stock's price rises above the average price of your position, the more profits happen. The stock average calculator helps to do all the calculation easy and fast. The information about share purchases is needed to calculate the average cost of the stock. It will help if we had confirmation from the brokers every trade. You see, that's what I was trying to talk about. If not, it can be called to the broker or check the online website where the transactions are listed, which is what I explained. I have to go to my cell phone app to see it. But I don't know if it happened with others platform, but TD Ameritrade on the computer, like I'm using it right now, my computer desktop, it doesn't show me that. So, and I even tried the settings, it's not there. So I gotta go to my cell phone to see in TD Ameritrade. The buying price of the stock typically varies every day due to the market. Stock bought at different periods in times will cost various amount of capital. To compute the average price, divide the total purchase amount by the numbers of shares purchased to get the average price per share. Averaging into a position can drive to a much different break-even point from the initial buy. Here's how to calculate the average purchase price for any stock position. Most investors never buy all the stocks in one buying. Instead, many investors want to ease into the position. Some might average into a share by investing an amount of money on the day over a while. Others want to buy in many parts, which is really smart. For example, in the stock market, in the penny stocks, normally there are many platforms that they will charge you a fee for you to make a transaction. Um, so, but it's really dangerous. The OTC market. So many investors, what they do is they think that they can pull it off in one particular penny stock, but they actually don't go all the way in. They say they see that it's a good play, but they still don't risk it all. They just put like a 2% out of the position to see how it goes. If it drops, they put another 2%. If it keeps dropping, they keep putting more, and more in order to make sure that it's all there. So that's what I'm talking about. And so it's what it's trying to say in here. So investors usually buy more of a stock when the market has unjustly sold it off. Most investors seem more favorable when using the average stock calculator for averaging a position because it is a disciplined approach, which I totally agree. Still, it helps to reduce the overall risk because of this approach helps level out any of the market's volatility. But doing something like this can actually take away a very good chance for you to catching a particular price on a very volatile stock. So you got to be focused and you got to be fast. 'Cause certain prices, I mean, they just go down and up and down and up, but there's certain lower low that you probably not might be able to see until the next week or the next 52-week low level. I mean, might probably become one of those and it will take a while. So you got to be careful. For averaging down a stock, the stock average down calculator does need a little more effort. Investor must decide the path they will take on the average position, but each subsequent investment will change the break-even point of the position, which the average cost is paid for the stock, and the average price is a significant number and an easy one to find out. So, a bond's average price is calculated from its face value and market price and is used to derive its yield maturity. The average price of a bond is computed by combining its face value to the price paid for it and dividing it by 2. The average price is seldom used in determining a bond's yield into maturity. The average price substitutes the purchase price in the YTM calculation. You know what? Let's actually stop too much, gibberish. I don't want to fill you with too much intel. Again, I'm going to put this URL down below so you actually have an idea of what it's all about. Let's make a small sample of this. Let's say that I actually have 100 stocks of Apple. Let's go to Apple stock. Right? Apple stock right now, you can see it's $174 with 1 cent. Right? You calculate that and it's 17,401. But then this stock price goes down to 150, which it happens. And I was like, you know what? Let me buy 100 more. But this time I want to buy it to 150. See, my average price is initially, that's what I bought it for, 174. But now I'm buying 100 more at 150. Let's calculate. Look, I lower it to 162. This gave me the calculation in advance how much it will take for me to buy cheaper, 150, 100 more shares. I mean 100, I think it was 150 that I said. Yeah, 150, and that's what I will get. That's pretty simple. So, and nothing. I just wanted to share this with you. This is a very nice tool. It's for free, and you don't have to be a stock investor to use it. You can actually use it for a variety of different things, but most likely people in the stock market actually needs tools like this handy, and you just can save it on top of your desktop, or you can use it on your own cell phone as well. Alright, I just wanted to share this with you, with all of you, and I hope that it's a handy tool that you can use. Many of you didn't know about this. I'm pretty sure that some of you actually have a very fancy other system to do so, but I just wanted to share this out. If any other concern, please don't hesitate to let me know. There's more intel on this website about this tool. Write me down below if you have any other concern. I'm pretty sure they could be more better than tools than this one, but this is the one that I came across with. Have a wonderful day. Don't forget to subscribe and provide some support to this channel, because this channel is all about yourself and providing you free intel that you can use to leverage out your life. Have a wonderful day. Adios.